All right. So we have a question here on inventory valuation. It says the costing department of this company classifies costs, values inventory, and computes profit for its products. The following data was recorded in the month of July 2023. There is an opening inventory of 150 units valued at 20 kwacha per unit on 1st July 2023. So here in the question, we've been given information about certain transactions. So as we're solving the question, we're going to be going through each of these transactions. So they tell us there's a sales of 425 units at 60 kwacha per unit that are recorded for the month. And the total expense for the month was 10,000 kwacha. So let's calculate the value of the closing inventory under each of the following methods. The first in, first out method, where the goods that came in first are the ones that are going to be sold first. The last in, first out method. That's what I'm calling it. Okay, last in, first out, where the goods that came in last will be sold first, and then the average costing method. Then part B says prepare the profit statement for the period using all three methods of inventory valuation. Okay, so we're going to start with the first in, first out. So this is the table, which is also called the stores ledger that you have to make. Okay, you've got three main columns: the purchases column, the sales column, and the balance column. Each column has got quantity, price, and value. Right? So it's not a complicated table to make. All right, just remember, just dealing with purchases, sales, and the balance. Then in each column, there's the quantity, the price, and the value. Okay. Okay, so we're going to start with the first in, first out method, Fifo. Okay. First thing, you need to take note of your opening inventory. Okay. So here we have 150 units valued at 20 kwacha per unit. So we're going to come to our stores ledger here. On the date, we're going to put 1st July. July is the seventh month, so 1st 07 2023. All right. Our opening inventory, we have 150 units. Each of them are valued at 20 kwacha per unit. Okay, 150 times 20 kwacha. That is going to be 3,000 kwacha. Yeah, 3,000 kwacha. So this is the value of our opening inventory. Any questions, colleagues? Are we all okay with the first part? The first, always take note of your opening inventory. If there's no opening inventory, then you go straight to the transaction. Okay, we go to our first transaction. 5th July 2023, we received 350 units at 24 kwacha. Okay. Basically, we purchased 350 units at 24 kwacha. Receipts and purchases, same thing. Okay. So on 5th July, We purchased 350 units at 24 kwacha. 350 times 24 kwacha, that is 8,400. All right. So every time you make a purchase, this is where now you're going to separate your inventory. Okay. Initially, we had 150 units. We brought in 350 units. So in total, we have 500 units. Okay. 150 of them are valued at 20 kwacha. Okay, then you also have 350 that are valued at 24 kwacha. Let me put the total amounts here. 3,000 and we have 8,400. Yes, colleagues, any questions? Remember, we're moving slow here. I want us to understand everything. So, any questions? Mm-hmm. Yes, 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 yes. Ahead, there's another person who had a question. And it would be wrong. At this point, it would be wrong. Because remember, there are going to be sales that are going to be happening, and we need to be erasing from these batches of inventory. So if you total up the amount, uh, calculating the values will be a bit difficult. So, sir, please do not total them up yet. Okay? The way they amount, yes. The way they are, you will just leave them like that. Okay. Any other question? Okay. The next transaction on the 7th, we purchased another 100 units at 24 kwacha 20 ngwe. So that was on the 7th. So we recorded the date here. 7th, 100 units at 24 kwacha 20 ngwe. 100 times 24 kwacha 20, we get 2,420 units. So we initially had 500 units of this good. We brought in 100 units. So in total, we have 600 units in our warehouse. Okay, 150 of them are valued at 20 kwacha. 350 of them are valued at 24 kwacha. Then 100 of them are valued at 24 kwacha, 20 ngwe. Yes. all is well, we can go to the next transaction. So just remember, colleagues, every time there's a purchase, just remember you are separating the inventory, okay? So that whenever you make a sale, you're going to know which ones have to go first, okay? Yes. All right. So on the 12th, right, we sold 250 units. So in cost accounting, as I said, whenever you make a sale, you're going to value the inventory at the cost price. In financial accounting, you're going to value it at the selling price. Please take that in mind, okay? With cost accounting, you're valuing at cost price. So we sold, what's the date here? 12th. 23. Okay, we've sold 250 units. So this is how we're going to do it. Remember, this is the first in, first out. So the first units that are going to go are these 150 units at 20 kwacha. All right, so here you're going to put 150 units at 20 kwacha. 150 times 20, 3,000. Then the remaining 100 units, you're going to get it from this next batch. Okay, so you're going to put here 100 units at 24 kwacha, 2,400 kwacha. So 150 plus 100, 250 units sold. Any questions, colleagues? We've sold 250. Okay, let's ask the question. They were sold, the goods were sold. So now, when you're selling the goods, you start with the first batch that came in, you get rid of that batch, then you go to the next batch that came in. So since we sold 250 goods, the first batch, these 150, we get rid of all of them. All right. 150 minus 250, it means we've got 100 remaining, right? Yes, the remaining 100, we remove them from this batch here. Yes. So what will yes, so what will remain within our shop? 600 minus 250, that is 350. Uh, so we have 250 goods valued at 24 kwacha. Since we removed 100 from this 350, so we've remained with 250. Okay. And then you've got 100 valued at 24.20. So this 250 plus 100 equals this balance here. So 250 times 24. 6,000. 100 times 2420, you get 2,420. So this is the secret here, colleagues. First, you see, okay, how many goods were sold? We said here it was 250. Then you now start picking from the batches. Okay, it's from the batches, that's where you start picking. All right. Yes. Any questions? At least in financial accounting, you just put here 250 selling price, so you get the amount. Life is easy like that. All right. Receipt, we purchased 200 goods at 25 kwacha 20 ngwe. So we get the date 21, 21st January. How many goods were these? 200. Valued at 25 kwacha 20 ngwe. So 200 times 25 kwacha 20 ngwe, you get 5,000. Okay, yes, this is good. I like, we should be calculating. Thank you, sir. 5,040 kwacha. So here on our balance, we had 350. We brought in 200 goods. So how many we have in total? 550 goods, right? Then we include this new batch, 200 at 25 kwacha, 20 ngwe. Yes. Go to our next transaction. Issued sales 350 goods. So that's 25th. So we've sold 350 goods. So we come to our batches. We'll start with these 250 goods at 24 kwacha. We get rid of them first. So we're going to say 250 at 24 kwacha. So we've got 250 minus 350, we've got a remainder of 100 goods. The remaining 100 goods we get from this batch here. So we'll say 100 goods at 24 kwacha 20 ngwe. $2,420. Right, so we had 550 goods, 350 have been sold, so remain with a balance of 200 goods 200 times 25.20, 5,040 kwacha. So that is the value of our closing inventory. All right. If there were two layers, this is where now you add up the total value, okay? As you asked Mr. Chatow at first, you said, is it okay if you add up the values at the end? Okay, that's when you add up. Then in your financial statements, under additional information, where you always see that note closing inventory was valued at this amount. This is where that comes from. Any questions before we go to the second part of the question? Okay. Part 2, using the last in, first out. All right. So here, this is like the opposite of first in, first out. The goods that came in last will be the ones that will be sold first. So using now Lifo. All right. So opening inventory is still going to stay the same. Okay. These 150 units valued at 20 kwacha going to still stay there. It's still going to stay the same. On the 5th of July, these purchases, okay, this is still going to stay the same. We purchased 350 goods. We have now a total of 500 goods. And we've got our values for the goods here. 7th July, again, we purchased another 100 goods valued at 24 kwacha 20. So these three transactions here are still going to stay the same. Where it's going to change now, it's when sales happen. Okay, with purchases, everything is just the same, but with sales, it's different. Okay, so we go to the 12th of July. Okay, we said we sold 250 goods. All right, so now we come to our inventory here. So we start with the goods that came in last. These 100 goods at 24 kwacha 20, they're going to be the first to go. So here you're going to put 100 at 24 kwacha 20. 100 times 24 kwacha 20, 2,420. Then the next batch is these 350 goods. All right. Since we've sold 100, so the remaining 150 goods will be removed from this 350 batch. So here we'll put 150 valued at 24 kwacha. So 150 times 24 kwacha, 3,600. Colleagues, any questions? With last in, first out, you go to the goods that came in last. So here, these 100 had to go first. That's why we've put them here. And the remaining 150 comes from this second latest batch. All right. So we sold 250 goods. Initially we had 600, sold 250, remain with 350 goods. So here we going to remain with 150 goods valued at 20 kwacha. That is 3,000. And then 150 were removed from here, so 200 goods valued at 24 kwacha. So 200 times 24, 4,800. Okay, the next transaction, we purchased 200 goods valued at 25 kwacha 20, value 5,040. So we come here. We had 350 goods, we brought in 200, so now I've got 550 goods. Hundred and fifty valued at 20 kwacha, 200 valued at 24 kwacha, and then another 200 valued at 25 kwacha 20. All right, so yeah, here 5,040. Here it has to be 4,800. Yeah. Then 100 here it has to be 3,000. Then on the 25th, we sold 350 goods. All right, so the first to go are these 200 at 25 kwacha 20. So here you're going to say 200 at 25 kwacha 20. 200 times 25 kwacha 20, that is 5,040. Right. Then the remaining 150 goods will come out from this batch here. So you say 150 valued at 24 kwacha. 150 times 24 kwacha. 3,600. All right. So we had 550 goods. We've sold 350 goods. So we remain with 200 goods, 150 valued at 20 kwacha, and 50 goods valued at 24 kwacha. So 150 times 20, we get 3,000. 50 times 24, 1,200. So the value of our closing inventory, you just add now 3,000 plus 1,200, 4,200. That is the value of the closing inventory. Yes, so Lifo is the opposite of Fifo. Okay. We start with the latest goods that came in. Okay, we go to the next one, the average costing method, Avco. At least with this one, there is no for separating the goods. Okay, so go with Avco, the average costing method. All right, so 1st of January for our opening inventory, not 1st of January, 1st of July, our opening inventory still stays the same. 150 goods valued at 20 kwacha. The value of our opening inventory is 3,000 kwacha. So where it's going to change is now when we have purchases. Okay. On the 5th of July 2023, we purchased 350 goods at 24 kwacha, valued at 8,400. So this is how we're going to do it here. We've got 150 goods valued at 20 kwacha, that is 3,000. Then we have 350 goods valued at 24 kwacha, that is 8,400. So we find what is our average cost of goods. So in order to get the average cost of goods, okay, is the total value of the goods. Let me write this down. Average cost of the goods total value of goods divided by the quantity. So here, 3,000 plus 8,400, we get 11,400. 150 plus 350, we get 500. So to get our average cost, the total value of the goods, 11,400 divided by 500. So 11,400 divided by 500, what do we get? 22.8. Yes, 22.8 kwacha. Any questions? Okay, we purchased another 100 goods. All right, so we have 500 goods valued at 22.8. Total value is 11,400. Then we brought in another 100 goods valued at 24 kwacha 20 ngwe. That is 2,420. So we find the average cost. So we first get the total quantity of goods, 600. The total value of the goods, 11,400 plus 2,420. What do we get? 13. Okay. So we get our average cost. So you say 13,820 divided by 600. What do we get? 23 flat, 0.03. Okay. Yes. So each time there's a purchase, that's what you're going to be doing. All right. Get the total quantity, get the total cost. Then after that, you can get the average cost of the goods. Okay. On the 12th, we sold 250 goods. So you value them at this 23.03. So 250 times 23.03, we get 5,757.5. All right. We had 600 goods, we sold 250, so remaining with 600 minus 250, 350. 350 goods valued at 23.03. So 350 times 23.03, 8,060.5. On the 21st of July 2023, we purchased 200 goods valued at 25 kwacha 20. So what we're going to do here, we have 350 goods valued at 23.03. Excuse me. right, then we've also got now 200 goods valued at 25 kwacha 20. 200 times 25 kwacha 20. Oh, 5,040. All right, colleagues, what is the total value of the goods? 8,060.5 plus 5,040. 13,000. Uh-huh. Like 100.5. Okay. And the total goods, 350 plus 200, we get 550. So our average cost, 13,100.5 divided by 550. What value do we get? 38.47. Okay. 38.47. All right. Wonderful. Then on the 25th of July, we sold 350 goods. So we just said 350 goods valued at 38.47. 350 times 38.47. What do we get? Mm-hmm. Okay. Excuse me. So 550 minus 350, we remain with 200 goods valued at 38.47 kwacha. So 200 times 38.47 kwacha. 7,694. So this is the value of our closing inventory under Avco. So you're going to see with these three methods,